Hello everyone, today I'm going to be talking about asset synchronization and how we can spot a fake SMT. Each of these slides right here represent one asset of the triad. This last one is YM, the middle slide is ES, and the first one is NQ. Let's get right into it. NQ trades down into a key level, which is the previous H6 sell side in this case, and forms a daily sequential SMT. After sweeping that low, as we see, we don't get a V-shaped signature and start consolidating. ES, which did not take the previous H6 low and holds that SMT, starts retracing, and we don't get a V-shaped signature either. So on NQ we start consolidating, and on ES we start retracing. As we know, price can't reverse from a consolidation or a retracement. YM, which is the last asset, actually when we get that initial daily sequential SMT, displaces away and we get this V-shaped signature and even create a fair value gap. So just based off this reaction alone, we know that YM is the asset we should be focusing on if we are going to long this to the upside, because we can gauge strength by, for example, displacing away, which is easy to see, and also gaps, forming a gap. So we displace with force. So by using just only phase of price, we can already anticipate that this SMT right here won't hold. So now what is the next step? We wait for driver to either confirm or invalidate this SMT. As we see right here, at the driver, ES breaks that initial daily sequential SMT and reacts strongly off it. As you see, we get a next day model where it wicks out a relevant key level and then closes back into the range. Most people right here are going to think that this is low probability since that initial SMT didn't hold. But as we can see on NQ right here, at the same time at the driver, NQ does not resweep this this low right here, and we get a strength switching SMT, which then confirms the upside move. But what does the last asset do? As we see for asset synchronization, which is when a broken SMT can trigger the synchronization to the upside, as we see right here, we want to have two assets hit a key level. ES hits and breaks that daily sequential SMT. YM still holds that daily sequential SMT, which is key and makes it much higher probability. And at the driver, what does YM do? It fills this fair value gap and hits this fair value gap, which also is a key level because this is an imbalance. So when two assets hit something relevant, especially at the driver, and then start showing some strength to the upside, this is a really high probability sequence. The next sequence I'm going to be covering in this video today is how we can use asset synchronization to our advantages and actually get more trading opportunities which still are high probability, because we don't only want more trading opportunities, but we also need them to still be as high quality. As stated prior, each slide represents one asset: NQ, ES, YM. Now, how can we trade YM in this instance as the lagging asset? As we see right here, we hit an intraday target, which can, for example, be the previous H6 and relevant high, relevant low, key levels. NQ hits the intraday target but doesn't reverse away. As we see, it hits it, it actually closes back inside the range, but the next candle isn't an bearish reversal and we don't get a V-shaped signature. So just based off that, as stated in the previous slides, they go hand in hand. We can already anticipate that this SMT right here, which is right here, won't hold. Another key factor to this SMT not holding is ES, the correlated asset, also not showing any weakness after taking that intraday target. It starts consolidating. So what do? We can anticipate that this intraday target right here will this SMT will not hold, and we could trade YM into that same target. To trade the lagging asset into that target, we need a strength switch, because we now need to see this lagging asset show some strength and willingness to get to the intraday target. Another key factor to trading a lagging asset is the strongest asset or the middle asset still having a weekly target or some more relevant targets above, in this case, the intraday target, because this will allow price to still have some liquidity to purge. As you see right here at the driver, what can we see? We see that NQ, after sweeping that intraday target, creates a down close candle. ES also creates a down close candle and then sweeps it at the driver, creating this SMT right here. And when we look at YM, it actually prints out a bullish candle. And this is a form of confirming that the strength switching has occurred, because this right here is a PSP. A PSP is, of course, when one asset prints a down close and the other asset prints an up close. This is also a really good way to gauge strength. So what does the driver do? As you see right here, YM does not sweep that PSP low, while ES sweeps that PSP low, and NQ does not either sweep that PSP low. Why is this important? Because since we know already that NQ is the strongest and still has that weekly target to hit, we still want this asset to show some strength and willingness to the upside. ES, in most cases, starts consolidating, because this ES is often the middle asset when we are trading the lagging asset up to the same target that has already been hit. So as you see, ES does not show the same strength when making that SMT and booming away, like for example YM and NQ did. So when we know that this SMT right here most likely won't hold, we don't trade YM to that weekly target. As you see, I don't even have it marked out on my slides, because it's still the weakest target. It's still the weakest asset, sorry, my bad. So we don't want to be greedy and just try to hold this to the weekly target as we can do with, for example, NQ. But we know that when an SMT is fake, as we have been discussing this whole time, we can now trade the lagging asset to the same liquidity, and then we get some real move downwards after the SMT breaks. Let's now jump into some real life examples and actually a trade I took on this day, and explain my logic top down using asset synchronization and spotting fake SMTs. Going into the day, this is them going to be covering. Going into the day, we still have a clear drawn liquidity on ES and YM, while NQ is in the middle of this range, as you can see. So we can already expect that NQ is the weakest pair out of the triad. So how can we catch this move to the upside? All right, let's start on the H6 to gauge, to go top down. All right, we open up here. All right, when we open up, we when we open up, as you see, we make the daily candles wick and then displays to the upside. Let me now look at YM. As we can see on YM actually took previous day's high in Asia. But what did I cover? When we start consolidating or retracing, this isn't an reversal signature. So what can we do? What we can do with this information? We can go on, for example, the weakest asset NQ and trade it up to the same high, because we know only when price breaks this SMT, we can get a new phase of price. And of course, we still have the higher time frame drawn liquidity on ES, so it's not logical to reverse off a previous day's high or a weekly sequential SMT when we still have the higher time frame, because we can't pattern trade these quarterly theory confluences. We still need higher time frame narrative and logic. So how did I catch this trade? Today, this day right here, I think we even had 8:30 news. So I think I actually took the trade prior to news, because right here we have a daily sequential SMT inside of this H1 gap, which is basically my continuation model. What else do we have? As we can gauge better on the M90, we also have a 90-minute sequential SMT, which makes this two-stage sequential SMT. And as we can see, it was here, like YM swept out the 6 a.m. low, while NQ didn't. So what can we do with this information? I already expect this right here to have formed the wick of the H6 candle, so I can catch the body of the candle, aka the expansion move. Now when we drop down to the lower time frames, let me just clear this all off. What do we see? When we get that 90-minute sequential SMT right here, I actually didn't even use any order block entry or anything like that. I took an SMT entry, but I still kind of use this favela gap to gauge like where price should go before I enter. So I didn't get filled right here. I think I've got filled around this the CE of this gap. So by understanding narrative and asset synchronization, we can already pinpoint our targets on the lagging asset, which is NQ, which is previous day's high. Now showing a new example of how we can use asset synchronization to get even the higher time frame buys for the day. As you see right here, Thursday, we took out our weekly drawn liquidity. And why do I expect a reversal now? Firstly, we have expanded a lot this week, and we have taken out the weekly drawn liquidity, so I expect this to cap off the weekly expansion. But as you see right here, this high on YM, if I'm not mistaken, was taken out a long time ago, but it didn't really treat it as a key level and did not show any weakness after taking this low, not this high, which actually is a monthly sequential SMT. So why can we expect it to trade down now? Because of ES sweeping that same high could be the trigger for a downside move on Friday. So when ES takes out that same high, while NQ still holds that SMT, and we also have a monthly sequential SMT, which is just an SMT between weekly candles, we can now expect a downwards move. And what else do we have? as stated in the slides, what's even better, when the weakest or the leading asset, in this case the downside, is inside a gap. So we still hold this SMT while ES breaks it. We can now anticipate an asset synchronization to the downside. So let's go into this day. By the way, all my trades, all these days and all my trades I've been talking about are in my X accounts, so you can check them out if you are wondering about entries or how the delivery was, or yeah, anything like that for more details. All right, so now we have a hard time frame SMT and a monthly SMT. We open up higher, which is ideal bearish daily profile. So I expect this to be the wick of the daily candle because of this H1 change in state, which confirms this as a protected high of day. At 9:30, what do we get on all assets? Let me just go to the same day on YM. Perfect. At the driver, what happens? How can we get onside with this move? As you see right here, 9 o'clock at the driver, what do we get? We get a sequential daily SMT. So now we have a confirmed high of day. We have an asset resync on the higher time frames. It's Friday, so we can expect it to trade back in the range because we have taken out the weekly drawn liquidity. So now it's just finding an entry, because since we have a daily sequential SMT right here, I can already anticipate that this should be the high of this H6 candle, and we can target all these failure swings, and especially this low as our main draw on liquidity. So now dropping down to some lower time frames. Now it's just like finding an entry, basically. I can't really remember what I even took on this day, but I'm sure it is on my X. But I think, what the fuck did I even take on this day? Yeah, I don't remember, but the most important part about this example is showing the logic and how we can even use asset resynchronization to get a higher time frame bias for the day. Thank you for watching.